Palantir stock is experiencing a sharp sell-off during Wednesday's trading session, with shares sliding 11% at the time of writing. This move lower places Palantir squarely among a wider group of artificial intelligence-driven momentum stocks that are being aggressively sold as investor anxiety around artificial intelligence intensifies. Even companies that continue to post standout financial results are feeling the pressure, as the market appears increasingly cautious toward high-growth names tied to artificial intelligence adoption. This downturn is especially notable because it comes immediately after a strong showing earlier in the week. Just one day prior, Palantir shares moved higher following the release of another impressive earnings report. Once again, the company demonstrated that its growth trajectory remains firmly intact. However, the broader market environment suggests that short-term sentiment and risk reduction are currently outweighing fundamental performance. When digging deeper into the earnings report, it becomes clear why many analysts believe the stock's pullback is more about market psychology than business deterioration. Palantir delivered strong outperformance on both revenue and profitability, while momentum continued to accelerate across its United States government and United States commercial segments. In addition, booking metrics pointed toward triple-digit expansion, reinforcing the idea that demand for Palantir's software remains robust. Revenue growth accelerated by 7 points to reach 70% year over year, with total revenue landing at $1.4 billion. At the same time, the average trailing 12-month revenue generated from the company's top 20 customers climbed 45% to $94 million. These figures highlight how Palantir is not only adding customers, but also deepening relationships with its largest and most strategic clients. This revenue strength was once again fueled by artificial intelligence-driven transformation initiatives. The impact was particularly visible in the United States. United States commercial revenue surged 137% year over year and increased 16% sequentially, underscoring the accelerating adoption of Palantir's platforms among private sector customers. Contract activity also reached new milestones. Total contract value hit a record $4.3 billion, reflecting growth of 138% year over year. Of this total, $2.6 billion came from United States commercial customers, a segment that expanded 161% year over year. These figures suggest that commercial clients are committing to larger and longer engagements as they embed Palantir's software deeper into their operations. Looking further at future revenue visibility, United States commercial remaining deal value advanced 145% year over year and increased 21% sequentially. Across the entire company, remaining deal value reached $11.2 billion, up 105% year over year. Remaining performance obligations also showed exceptional growth, rising 144% year over year and 62% sequentially. Management explained that this momentum in remaining performance obligations was supported by several large long-term renewals with established international customers during quarter 4. These renewals point to high customer satisfaction and long-duration contracts, which help stabilize revenue streams and improve long-term forecasting confidence. The government side of the business also continued to perform well. United States government revenue increased 66% year over year and 14% sequentially. This growth was driven by sustained demand from the Department of Defense along with civil agency customers, highlighting the continued relevance of Palantir's software in mission-critical government applications. Turning to the company's outlook, initial guidance for calendar year 2026 significantly exceeded Wall Street expectations. Management called for more than 60% year-over-year total revenue growth, well above the roughly 40% growth anticipated by analysts. In addition, Palantir guided toward $4.1 billion in adjusted free cash flow, surpassing the $3.1 billion expected by market forecasters. Citi analyst Tyler Radke characterized these revisions as some of the strongest large-scale results he has seen across the enterprise software landscape. He emphasized that the guidance is particularly impressive given that management noted no meaningful changes to its forecasting approach. For comparison, Palantir began the prior year with initial total revenue growth guidance of roughly 30% and ultimately exited quarter 4 with 70% growth. Radke also highlighted that Palantir's momentum increasingly stands out in a software market where accelerating growth stories have become rare. He attributed this differentiation to the company's leading artificial intelligence forward-deployed engineering approach and its powerful data ontology framework, which enables customers to rapidly operationalize artificial intelligence across complex data environments. Following another major upside surprise in guidance, Radke raised his growth outlook for calendar year 2026 by 10 points to approximately 61% year over year. This expectation is anchored by projected United States commercial growth of roughly 115% year over year, signaling confidence that commercial demand remains in an expansion phase. In addition to revenue expectations, Radke moved his operating income and free cash flow forecasts to the upper end of management's guidance range. This adjustment reflects what he described as consistent outperformance on profitability. As a result, his long-term growth assumptions also moved higher. He now models a 5-year compound annual growth rate of roughly 70% for United States commercial revenue, up from around 50% previously. Consolidated revenue compound annual growth rate assumptions were also lifted to approximately 47%. These upward revisions led Radke to increase his price target from $235 to a new street high of $260. That target implies potential upside of 86% over the coming months. His rating on Palantir remains a buy, reflecting strong conviction in the company's long-term growth story. Radke's optimism is shared by a majority of analysts covering the stock. 9 additional analysts align with a bullish stance, while 6 maintain hold ratings and 2 recommend selling. Taken together, these views result in a moderate buy consensus rating. The average price target across analysts stands at $190.25, implying potential 12-month returns of 36%. Beyond analyst opinions, Palantir's latest earnings report also delivered 2 critical messages that help frame what may come next for the business. Palantir has been one of the most closely watched stocks throughout the artificial intelligence boom due to its software platforms that enable organizations to extract actionable insights from complex datasets. Demand has increased quarter after quarter, driving strong earnings growth and solid long-term stock performance. While the company has been operating for more than 20 years, its most meaningful growth phase only began in recent years. This acceleration followed the launch of the artificial intelligence platform more than 2 years ago, which allows customers to directly apply artificial intelligence to real-world challenges. Palantir's systems combine and analyze customer data, then help organizations put that information to work. This capability can lead to improved processes, refined strategies, and entirely new forms of innovation. The company serves both government agencies and commercial enterprises, with a significant portion of its current business coming from the United States government and United States companies. The broader surge in demand for artificial intelligence solutions has been echoed across the technology sector. Against this backdrop, it becomes clear why Palantir's platform, which enables rapid and practical deployment of artificial intelligence, has gained such strong traction. This momentum has driven double-digit revenue growth quarter after quarter and helped push profits to a record $609 million in the most recent quarter. The first major message from management is that existing customers are expanding their commitments at a faster pace, with deal sizes growing substantially. One example shared involved a utility company that increased its annual contract value from $7 million in quarter 1 of the prior year to $31 million by the end of that same year. The second key message is that new customers are entering with much larger initial deal sizes. In one instance, a healthcare company tested Palantir's software during the summer and later signed a contract worth $96 million before the year concluded. Together, these trends show that customers are not simply testing Palantir's offerings and moving on. Instead, they are recognizing sustained value from the artificial intelligence platform and committing to broader, longer-term engagements. This dynamic supports a constructive outlook for future growth and suggests that Palantir's expansion story remains very much alive, offering encouraging signals for long-term investors. With that being said, I will see you in the next video.